What's up, guys? Everybody's got questions about silver. Everybody's got questions about precious metals. Sell here, run for the hills. What are we gonna do? And most of the people who know me know the answer to this already, but I'm gonna go through this a little bit more in-depthly today to give you guys an understanding of how we're gonna do this as traders. There's a difference as a speculator or even a person who's writing about markets. From writing about markets, I can say things like, hey, we're going to be here and we're just going to hang on to the silver because silver is going to be $250 by the end of the year. Sounds really nice, sounds a little sexy. At the same time, it's not really the answer that you want as a trader. As a trader, we got to trade in and out of it. What if silver has a 30% drawdown before it goes back up? What if silver never hits 250? These are the questions you have to answer as a trader. And here's the answer I'm going to give you guys is nobody knows where silver is going to end up, including myself, including any analyst who's ever going to say anybody who's thrown out price targets. We have ideas where we think things can go, but do we know anything for certain? Absolutely not. So anyways, today we're here with just me. Sam is out. So you guys know is when nobody's around, when it's not Steve, it's not JC, it's not Sam. Nobody's around. Things get a little crazy. We end up in a lot of different areas. So we're going to cover a lot of things today. You guys can hit that like button, give us a thumbs up. And also feel free to share this today and handle the comments for me today, guys. I will be watching, paying attention to the comments, but I will not be able to jump in there with you guys today. So feel free to say something. You guys have questions, feel free to ask them in there. I will get to them if I can. All right, guys. So starting out with the first chart here. Gene, let's go to chart 2. So chart 2 is the dollar index. So as we're looking at the dollar, everybody, it's been a while since I've been talking about the dollar being in a bearish cycle. Basically going back to 2025, we saw this peak here, and this coincided with extreme positioning from the dumb money. So dumb money got extremely long, meaning these are things like speculators, fund managers, and so on. That doesn't mean they're stupid. We just call it dumb money. What they're doing is they're trend following. And when they really get off sides and everybody is following that same trend, we usually get to that scenario where a top forms right around that time. And then we came down right off of that, those highs in, I think that was January 2025. And then as we moved down through the down cycle, it was a very steep correction, as you can see right here. Steep correction happened. And then we kind of bottomed out around 97, 98 and just kind of chopped sideways for a little while. Every time there was a little rally, every single person was like, the dollar is going to do this. The dollar is going to go higher. The dollar. I mean, man, it's just a recording. And for me, it's like, yes, I know there can be bounces. I know things can shift. I know things can change. I just kept sticking to the same point. Whereas if we look at the yield curve, and for you guys who were at the Portfolio Accelerator, you got to see me talk about that quite a bit. We're looking at the yield curve. We're in a bull steepening part of the cycle, meaning there's more money going into the money supply. As long as we're in that scenario, we will continue to see the dollar most likely head lower on long-term time frames. Yes, there will be bounces. Yes, there will be short covering positions. Yes, there will be all types of things that happen. You guys are all correct. However, the long-term primary trend is to the downside. So most of the time what I'm going to say is exactly like I've said for the last year, which is any rally will most likely be short-lived. We'll see it peak out, come back down, peak out, come back down. I don't know. Like everybody be like, what if it gets to 102? I'm like, if it gets to 102, it's going to get smashed at some point. If it gets to 104, it's going to get smashed at some point. And to me, it couldn't even sustain above 101. So not being able to stay above 101, and then this big bear flag pattern. So this is what we call a bear flag. Basically, we come down in this downtrend, then we chop sideways, nice bearish flag pattern, and then boom, we break down once again, heading right back down to the downside. My target, as you guys have known, as I've talked about for the last year, is around $90 to $92. I think the next thing it's going to hit is 92. I think it'll happen very quickly. That's going to sound crazy to some people, but really, I think that's something that we need to pay attention to and just monitor it. If it continues down this way, I want to keep all of our trades just about the same and possibly rotating a little bit if some things were to change a little bit. So speaking about that change, we updated our members with a full breakdown yesterday, right near those highs around 111, 115 yesterday that were hit. So we updated our members about silver. But I'm going to give you the background on gold. So I'm not going to give you guys exactly the trade on silver. That's for our members only. But this is what we're looking at in the gold market. And this is how I trade. So, this is straight up my trading strategy. This was the breakout. So this green line is that breakout that happened, the sustainable one that happened in February 2024. We get gold starts to run. Nice run. I think it was above 2150 around that time. Gold starts to make a big move. So the blue line, this is a trailing stop loss. So this is set by an ATR. So that's the average true range of this product. So you basically get an understanding of this is how volatile something like gold is. So gold being that volatile. And as you see, exit is a 60-day low. Sometimes that gets above the blue line. So sometimes when you're consolidating, you're going to get a better exit by using that red line. Sometimes when it's breaking out into a parabolic big up move, you're going to get out better with the trailing stop loss. Most of the times these things go sideways a little bit before they really break down. So most of the time you're going to get a really good exit. It's not going to be this far away most of the time, but there are crashes that happen in the commodities market. So we want to be open to both sides of that. So understanding risk and hedging risk, I'm just riding this trend. I'm not really doing much here. I'm just letting this thing go, which is much easier than trying to trade in and out of it or trying to think when I'm going to get in and out of something. So I go, if I'm a trader, I go, okay, 2,100 for gold. And it breaks out. It hits 2,500. You're like, oh my God, I'm a genius. I'm going to get out of this trade. I made so much money. This is great. And then it goes up to, 3,000, 4,000, and so on. You're trying to get in and out of this thing. And then maybe you're missing it, and then you're getting mad, and you're like, I got to short this thing because it's going to crash at some point. And at some point, the bears will always be right, and at some point, the bulls will always be right. It just depends on timing. So as we're kind of in this strong uptrend here, and as we're moving nicely, like I'm just sitting on my hands as everybody's arguing what to do with the position. So what's important with this and why I'm saying all this is you should always know where you're getting out before you get in. Most important thing I ever learned as a trader, biggest thing that I think that I could teach everybody today, which is know where you're getting out before you get in. If you put on a position in silver, if you put on a position in gold miners, copper, tech stocks, bonds, crypto, whatever it is, I know before I enter the position exactly where I'm getting out. That doesn't mean I'm going to catch a perfect top and say, I know the top's going to happen and therefore I'm going to get out. You're never going to guess that. You trying to guess the top's going to mean I'm going to shave some of that position here. I'm going to sell the full thing here. I'm going to try to rebuy it here. I'm never going to do it. And then when it's too high, I'm probably going to say, never mind, it's too high now. And then it's going to keep trending up like this. And then it's going to move sideways here. Then I'm going to go, maybe I'm going to short this thing. I mean, your brain isn't going to work properly because we're not built like that. I talked about this the other day. I go to the grocery store. So we have this crazy storm in Ohio. We have, basically overnight, we get like 1.5 feet of snow. Now, once again, it's not really that bad to me. I'm from Cleveland. As a Clevelander, it's like, yeah, whatever. Down here in Columbus, it's like they don't have the capabilities of really handling this. So people got stuck in their homes basically for, a couple days. I didn't. I'm crazy. So I cleared off my car and drove through and got stuck a bunch of times and went to the gym because I'm a psycho. But anyways, most people, they got stuck at home. So the day before, I go to the grocery store, pick up a couple items, nothing crazy. Once again, people are going for the toilet paper. Where everybody needs toilet paper. Toilet paper's gone. Snow shovels. People are walking out with like 4 on their shoulder. Like, I got all these snow shovels because I'm going to need all 4 of these for whatever reason. I'll never know. Every single store around here is sold out of snow shovels. You cannot buy a snow shovel in Ohio at the moment. That's how crazy it is. And then the bananas are all gone. I don't know what exactly is the best nutrition in the world for, being stuck in your house. I don't think bananas are probably it, but hey, people in Ohio thought it was bananas, so they all just grabbed a bunch of bananas. Anyways, my point in bringing this up is that that's how traders think. Like that's how, and I'm talking about all traders. Like if we don't have a system, if we don't have parameters, if we don't have a strategy, we're just out there buying a bunch of bananas, toilet paper, going, oh my God, I need all this. And then it's, let's say it goes down, then going, oh my God, I probably need more. It's cheaper. I mean, we're all crazy. Like we're all like a little bit off. We're not built for trading markets in a way that's conducive and makes money. But what we can do is get an understanding. And the reason why is Once the cash is in your account, so let's say you take this trade in gold, you're moving up. Gold goes from 2,000, let's say, to 2,500, 3,000 even. You've made a bunch of money. Once you see that psychological amount of money, you're going to want to get the hell out every time. I mean, even when I look over the portfolio, I've just become disciplined over the years. That's the only difference. Is I look at it sometimes and I'm like, damn, silver. That's a lot. That's a great trade. I should take the money, ring the cash register, and run. It's really high. You know, anybody with two brain cells could say take profits here. However, I'm going to follow my strategy and do it that way. But for people who are looking to take profits, Sam and I did put this out yesterday for our members so they could get out right near the highs. So this was our target level that we recently had, which was 111. So at this target of 111 on silver, you could get out, pull that position away. I'm not a target trader myself, but for guys who are target traders, we update this. So you guys, if you guys are trying to get out and catch tops or bottoms, that's as close as you're going to get, because once again, we knew exactly where these levels were before the trade was ever put on. We highlight them by basically going, okay, above 73, we like it to 111. If it can't sustain above 111, we're probably heading back to 73 very quickly, and so on and so forth. So this is a way to trade targets for target traders. Not quite my thing, but I want to show you guys different things because not everybody's the same trader. I think life generally is about figuring out how you do things. And how I do things is this way. How other people do things might be this way. And there's nothing wrong with either one. I'm just saying, figure out what you're going to do, know where you're getting out before you're getting in, and be ready for it, because silver, even though, yeah, I mean, it's still kind of signaling a little bit of a risk on, it's getting a little frothy up here. So you got to be patient, vigilant, and understand where you need to get out. And so that's where I wanted to start today. So getting to the next chart, we're looking at Gold Rush Equal Weight Commodities Index. This one we've been watching for a while. So this doesn't have gold in it either, by the way. So this is basically all of the commodities X gold that are traded on the big futures exchanges. We are seeing the same thing I've been pointing out for a long time, a long-term consolidation, very low volatility, almost no volatility here. And as we see no volatility, we're looking for that breakout. We get a great breakout to the upside. We start a brand new uptrend. I think this is really going to go. I think this is the time that this thing's really going to go. I've been talking about it since last year. It was either going to be end of 25 into 2026. Now to 2026, we're seeing the big moves. Something to keep in mind for traders. There's a reason why you'll see me always share year-to-date numbers. A lot of people go, what is that? Why does that even matter? There's no time frame on this year-to-date. What does it matter? Well, year-to-date numbers matter for a specific reason, and it's very important, which is last year, 2025. You guys see me trade and how I trade my fund. I'm independent. I trade on my own. I'm not really beholden to any of the institutions anymore these days. So because of that, I don't have to do anything I don't want to do. So if I'm in a trade, trades last year like gold, silver, copper miners, whatever it is, I'm able to hang on to those and just ride those trends and be disciplined and follow my systems. Some managers, I mean, when you're running, let's say $40 billion or something crazy, they're going to go, hey, year to date, I'm doing pretty good. I'm up, let's say it's Q2 of 2025. I'm up 30, 40%. I'm going to take the money. I'm going to run, or 20% even. They're going to take the money and they're going to run. They make fees on that percentage. So, they're going to take the money, they're going to run, they're going to make their fees, and they're going to be happy with it. But that means they have a lot of cash on the sidelines. And even the guys who aren't doing it to that extent of Q2, a lot of people are going to do that in Q4 to book their year. So get into 2026, you start to see where money is flowing very early. So you start to see year to date, you start to see people start putting money into energy stocks, which are leading the way. Then you have materials right with it. Then you have even regional banks are looking better, and so on. So you see where the money is flowing currently. Commodities, obviously money is flowing in the commodities market. So I would continue to say this will most likely continue through Q1, Q2 of this year at the least. And I think we've started this brand new move in the energy cycle. And speaking of which, This is a chart I shared the other day just on Twitter and on a specific channel. I'm basically looking at this going, okay, well, we have ExxonMobil, we have the yield curve. And keep talking about the yield curve, guys, because it's important. As long as the shape is the way it is, meaning a bull steepener, we are in an environment where we should see energy continue to move as the dollar continues to get weaker. As you see these red periods of time really coincide well with ExxonMobil against the S&P 500. Now we finally got to a point where Exxon is starting to bottom out and move higher. And that's really telling me that this cycle is going to go. This is the bellwether. This is the big name in the energy space. Sam has the idea that this thing's going to end up at $1 trillion again. Market was not again, sorry. For the first time, it's going to hit $1 trillion market cap. So hitting $1 trillion market cap is very, very possible for this name. It was one of the biggest. A lot of people forget if you go back in time and you check out like what were the biggest stocks in the S&P 500, what were the biggest stocks in the U.S. stock market going back, 100 years. You're going to see ExxonMobil at the top of the list many times, including as recently as the 2000s. Just I think it was 4 or 5 years ago, it got kicked out of the Dow, and that was the first time it got kicked out of the Dow. And so basically, this is kind of an interesting scenario where we could see energy stocks start to pick up again and start to look like some of the tech darlings. I don't think technology is going anywhere. We're the United States. That's mainly what we do here. But at the same time, I wouldn't be surprised to see ExxonMobil get into that list and start to be in the $1 trillion club with names like Apple, NVIDIA, Microsoft, and so on. And also what I'm looking at here is oil. Oil has that. It's been a really tough trade. It's been really nasty. You guys watched the morning show. You guys saw, what was that? Been right after the Venezuela incident. I'm very bad at time without looking at it directly in front of me. So you guys saw me talk about Venezuela and the fact that, there was so much news, like basically Donald Trump for, I don't know, the last year and a half has been able to get on and say, hey guys, I want gasoline under $2 a barrel. And gasoline price would get hit, the oil price would get hit, energy stocks would get hit almost every single time. And then you see him go in, like, which is the biggest news event I think we've seen in years, which is going to Venezuela. And then through going into Venezuela, see, okay, well, now I have the oil. Now we've done this. This will flood the market. This will make our prices so low. This will do this. He's basically saying all these things. And then the price didn't budge that day. It actually was up that day. I thought that was fascinating. And to me, that was the biggest news failure event I've seen of the year. And we'll probably see for the last few years. The only thing I could compare it to is the S&P 500 bottoming out for the CPI report that happened. It was one of the worst CPI reports in the last 20 years that happened in October 2022, which was the bottom of that bear market, which turned into the next bull market, which we're still living in today. So I think we're looking at a very similar scenario for oil here. I do think the question mark might be Venezuela at the top of this. Doesn't even seem like it makes sense to me because all of these other things are very significant. These turning points, Russia-Ukraine war, oil front month goes negative, meaning we're flooded with oil at that point. However, it just is what it is. Sometimes a news event doesn't have to be, it can be very contrarian. The same like oil price hit single digits in the 90s. Everybody was like, it's the end of oil. And then bam, oil actually bottoms out right there, continues to go higher for about a decade, makes people a lot of money going from single digits. It was under $10 a barrel all the way to 150 at the top, I think it was. So I want to talk about the energy trade a little bit. So, we talked about this a little bit when I was at the Portfolio Accelerator. And, the idea here is that, we've played this game before. I've played this game before. And what I mean by that is when you look, let's go back and forth a little bit. Here's energy. Here's gold. And so when we look at gold, we see this sideways consolidation. A lot of people forget gold. They think gold like is this thing that just ran and ran and ran and everything was just fine and great. And it was this magical trade. And it's really like, no, like if you've been trading it like I have over the years, like I remember like the little bounce that happened in 2016, you saw a nice rally in gold. The miners had a really good run. But then that topped out very quickly, hit resistance here, and that was the end of that. And then you get into 2018, you kind of get a tradable bottom that kind of happened. We get this, it goes up, moves a little bit sideways before it breaks out to the upside. And then we got a nice run. And that was the end of 2019 is right here. And then we moved sideways, started to move higher once again right before COVID. Then COVID happened, got a little smash. And then we moved up. We hit the 2000 zone around those old highs from 2011. And next thing you know, it just topped out. And that was August 2020. A lot of people forget August 2020 was when gold topped out. Then gold went sideways for years. Basically, this breakout really happened in 2024. So gold went sideways for that long. And then the breakout finally happened. And then we got this upside big run. Like I said, I played this fucking game before. I'm a commodities trader. I see this all the time. Commodities are dead until they are not. They are one of the toughest vehicles to trade because most people, if you're trading it like short term and you're like, okay, I want to buy this, I'm going to trade this little uptrend here. I'm going to buy every single move that ever happens without a system or a strategy, you're going to get killed in commodities. If you have an idea, you're going to trade new highs, 52-week highs, whatever it is. Breakout, some sort of breakout strategy and so on, you're going to make a lot more money than the guy who's sitting down here trying to pick every bottom. It ain't going to happen in commodities. Commodities don't work that way. Breakouts, they tend to run and something has shifted and changed, and then they will continue higher for a long period of time. So that's what I think is happening here. Like it's the same with energy. Jason, energy's been so tough to trade. It's been such a pain. It's been so hard to maneuver, blah, 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 whatever it is. I can't keep trading this thing. Why do you keep talking about energy? It's annoying. I mean, even peers of mine that are friends of mine are like, dude, stop talking about energy. I'm like, I'm not even talking about buying the damn thing. I'm talking about the fact the way the cycle works. And the next thing that's going to happen within that cycle is going to be energy starts to move higher. That's it. That's all I was saying before that. Then I started to buy some of the stocks at the end of last year. Now we're at this point of going, okay, energy is really breaking out. Energy is really making a move. Some of the names like ExxonMobil and others that we're talking about are making out. I want to see, we're up here now, but I want to see a weekly close above this level. That would tell me a lot about this energy trade. I think this has legs. I think it looks great. I think everything is telling me that energy is going to start joining the party now. And something to think about too is when we look at gold, look at this breakout in gold happened in 2024, but also that top in August 2020. Does anybody know what happened to energy? You can answer it in the chat. But energy, right before the election in November 2020, we had this big gap up. This is not a candlestick chart, but this was a huge gap up here. So we had a huge gap up. I think it was like a 15% on the day, maybe ended up only 10% up on the day. And everybody thought I was nuts because I'm buying this breakout here. It was a big gap and go. So I bought it right there. Everybody thought I was crazy, and that started the energy move higher. So once again, we kind of saw money rotate out of gold and into energy. Now, a lot of people are saying, well, where's money going to go for gold? It can go here. It can go technology. It can go bonds. It can go dollar. It can go a bunch of things if money comes out of it. Now, granted, like I showed you guys earlier, I'm not selling my position yet. I'm just speculating at the moment. I think if money's going to go anywhere out of gold, I think gold might slow down and silver might slow down. But if money's going to come out of that and go anywhere, I think it goes right into the energy sector, very similar to what it did in 2020, right near these lows. I would not be surprised by that by any means. And I think that's probably the next big trade that's coming that will look like this at some point. We'll come back in a couple of years and we'll say, wow, energy really looks crazy. And it'll be like, yes, it looks just like gold did a couple of years ago. And gold might consolidate during that period of time. That would make a lot of sense. So I want to continue to think about this energy trade in a big way. I want to think that this breakout could continue. I want to, look for a weekly close here above that to really confirm my thesis on this. And like I've talked about before, I want to own the big names. I want to own the large cap names. I want to own, something easy to do for you guys who are options guys. Go out and buy some long-term leaps. That's a good way to play this one on just the index itself or the OIH or whatever you want to take. Buy the ETF options and put them, about a year out and see where you're at in a year. That would probably be a good way to play this. But also buying the stock is going to make a big move as well. We aren't talking about buying like the S&P 500 ETF, the SPY, and hanging on to that for a while. Yeah, that might be very boring for some people, but energy stocks really make big moves. I wouldn't be surprised to see this big move chart to get started today. So I think that's what I'm going to keep looking at and paying attention to currently. So go through a couple things. Sam said some really good stuff to go through before we go. So commodity nations. This is something. So Rick at Null Charts on Twitter, he went through a bunch of stuff recently showing, more of the international trade. I'm always talking about the international trade. We're long a lot of international stocks at the moment. I'm not long Australia. Almost everything else on here I am long besides UAE. I am long a lot of things in this area. So I do think that this is probably an area that you really want to start paying attention to as traders. This is not something that's like going to be the easiest trade where it's just going to go up perfectly. Nothing ever will. However, I think the people who are stuck in the United States investing and going, I need to be in the US stocks. I need to be in US stock market. This is going to be the best. This is where I need to be. Because it's performed so well, Jason, for 15 years. It has. They're not wrong. However, the relative strength is shifting. See, as the relative strength down here is shifting. As the relative strength is shifting, I want that ability to be nimble and flexible. Last year we started buying these things pretty heavily. I think South America looks great. I think South Africa and Africa generally looks great. So these are areas that most investors are not even going to look or pay attention to. I know some people even watching today are like, why are you talking about this? I'm not going to invest in any of it. If you look at some of these individual names, though, and if we think of ourselves as that, this is the thing that I always talk to people about. It's like people want to short a gold miner, for example. They want to short gold miners because they went up so much. Do we think of ourselves as technicians, or do we think of ourselves as fundamental guys or speculators? For myself, as watching the price action, I'm always going to do what the price action is saying. And if the price action is saying, I want to continue to own international stocks because they're continuing to be in an uptrend, I'm going to buy those. I'm not going to overthink it and go, I don't like investing in Chile. It's very communism in China, whatever. People have all types of hangups. I'm going to just go, the price action makes sense. I'm going to make some money. And it works. Like, that's the thing about it. At the end of the day, it's like the price action trading just works better than anything else I've ever tried and back tested. And I've back tested a lot of things. Price action trading works the best as long as you manage your risk. You got to manage your risk. That's with anything, whatever type of trader you are. I'm just saying what works the best and works the best for me in my time frame. And if you're trading these types of products, you're going to really want to follow the price action. If this thing's in an uptrend, I want to own it. So I want to continue to own international stocks. I think it looks great. I think that's somewhere an area there a lot of people are going to continue to overlook. And also something that I love to think about is most of the investors in the world are offsides this trade. They are not looking at South America. They are not looking at Africa. They are not thinking that the United States is going to continue to underperform. The only place they're probably looking at is possibly Europe and going, well, Europe could be an area that this sounds really nice. It's adorable. There's some great stuff in Europe as well. I am long some of Europe, but all over the world, there's opportunities, and it's basically all one trade, as I talk about all the time, which goes back to the dollar. It's all one trade. Dollars weak, I want to own things like energy. Dollars weak, I want to own commodities. Dollars weak, I want to own international stocks. This is all one trade, and that's one thing I think about almost more than just about everything else as a trader, is just getting that understanding that it's all one trade. I want to understand how to correlate these things in a way where I can be diversified in a safe way, but also make a lot of money because I'm not overly diversified. Something to think about for all you portfolio managers out there. So looking next, this is Agribusiness ETF Moo. Shout out to Mike, wrote me yesterday, like, yeah, good call out on Moo. Beautiful setup. It is a beautiful setup. We've been talking about it for a while. Straza released a note recently talking about this one as well. I think that was just today. So, he found a bunch of good names in there. This is a really solid ETF that is an area that you're going to want to be exposed to as a trader. Because look, the market is dynamic. I don't think you guys know me. I will be like, okay, today I'm gonna buy this weird stock in this weird lead stock in Russia. Granted, I can't trade Russia anymore. But for you guys who've been around for over 6, 7 years, you guys even 10 years, you guys have seen me trade Russia and Russian stocks and the ruble many times. I will trade just about anything. So looking at this, like this is an area where you want to understand that markets are dynamic and shift. So maybe technology and the Mag 7 tech looks fine, but the Mag 7 looks like it's starting to lag a little bit. So if I'm lagging in the Mag 7, where are the areas where I want to be? Well, what's a very small part of the US stock market these days? Well, agribusiness is a very small part of the market. Energy is a very small part of the market in the US. Copper miners, very small market in the US, and so on. So these are areas that if you are a US investor and you're predominantly stuck in only US stocks, you're going to want to look at these areas. But also all those sectors that I just talked about, where are those all prominent? South America, Asia, Africa. Once again, you're going to want to really keep an open mind here going forwards as a trader. Not saying the US stock market's going to crash or anything. I'm just saying the same thing I've been saying for years, which is there's better places to be with better outperformance. That doesn't mean I'm saying don't invest in the United States. I'm saying be in these areas like agribusiness, be in areas like gold miners, copper miners, energy stocks, and so on, the very materials, the very small sectors in the market at the moment. And another one, just to take a look at energy here. This is the equal weight energy index compared to the equal weight S&P 500. This is sitting at a major zone currently. If this breaks out, this will be a very explosive trade. And I think this is coming very soon. I think that we're in a scenario here where every rising tide is going to lift all boats. I want to keep an eye, though, on the dollar. I want to see that continue to move down. I want to see oil really hold this level here and continue to move higher. And I want to see the XLE index as a whole sustain above that level that we talked about earlier. So if we can get that breakout in XLE and we're sustaining above, let's say $50 even, I don't think this thing's coming back anytime soon. I think that it's going to just continue to trend higher. But all right, guys, if you guys enjoyed the show, just letting you guys know, you guys can sign up here. Sam and I put out research every single week. We talk about gold on Mondays. We talk about currencies. You get the access to our currency report. Rick does that, does a great job there, where we highlight currencies and international markets and where we want to invest in going forward. And then we talk about commodities markets. Sometimes we'll talk about things like tin, zinc, lead. These might seem obscure to some people, but at the same time, when you're able to find the individual stocks inside of these sectors and give it to our members, make a lot of money, that's what we do, and that's what we do well. And then the bond report. I write the bond report once a week, basically going over what's going on in the bond market, what's going on with liquidity, and how it's going to affect you and your portfolios. So, all right, guys, hope you guys had a great one. I had a lot of fun doing this. I always enjoy when I can get on and just kind of go just about everywhere in the markets. So hopefully it wasn't a little bit too unfocused for you guys, and I hope you guys had a good time. Sam will be back with me this week, thankfully, so you guys will see him next week. And we'll see you guys next week, where this one's special this week because we ended up doing it on Tuesday. Usually this is Thursday. We do have an event with Straza on Thursday this week, so definitely check that out. But we will be back with you next week on Thursday at 2 p.m. We'll see you guys later.